What's going on, traders? Welcome back to day 9 of 25 days of trading. Today I want to talk to you about the truth behind risk reward. Now, in my opinion, this conversation has changed quite a bit throughout the years, and more people are talking about it in different perspectives. And I want to share mine. That's really not that important. It is not my main focus when it comes to my trading. We'll go over plenty of markups and why that reasoning is, because I think it holds a lot of people back and causing them to lose more money or not gain as much money as they could, right? So I have my TradeZella here filtered to the last 100 trades. With this risk reward not mattering, and again, we'll take a look at some examples. I shouldn't say does it matter, but it really doesn't. Then you look at the trade win percentage, it's only 63. Nothing too flashy. I think anyone, honestly, if you have a strong strategy and some experience, can win 63% of the time, right? But the thing that matters most with this, if you're not going to care about risk reward as much, the day win rate, 90. So on those 37 losing trades, I've bounced back with some winners, but I also ended the day green 36 times to 4. That's going to keep you alive. That's going to keep you alive no matter what your risk reward is, right? But you can't be having a 50% win rate and a 50% day win percentage and not care about risk reward, right? So I should preface that before I get into some markups here. The reason I've let go of risk reward, I'm just trying to make money, secure my gains, secure my wins when they're there. Let's take a look at this, albeit choppy setup that we just took this past week, that we get a break above New York VWAP. Now, for anyone that's unfamiliar with my strategy, it's all for free on AceFX TV. You can go through it with your first month free. If you use code FIRST, I'll give you my entry and exit. But you'll see the risk reward will fluctuate because I'm trading prices to levels, right? So if I'm long on this New York VWAP break, stop loss has to go at the low of day. Where am I getting out on this trade? Looks like in the middle of nowhere. You can see on the left side here, it's actually at the overnight VWAP. Definitely a place we could want to bounce because we've been underneath it. This could be the retest and we move back lower. But I'm only up 0.8%. So if I don't close it there because I need 1R, I need 2R, I could have made 54 points, but instead I just made 0 because you're just going to let it turn back around and make nothing out of it. Not what I'm looking to do, where I could bag those 54 points, maybe come back later, make another 40 points, make another 20 points, whatever the case may be, right? Another thing on this topic, maybe we can look at a different markup for it. Stop loss placement. So the numbers aren't on here, but same idea. Break above New York VWAP. Stop loss at this low of day. I'm getting out at the next VWAP. In this case, because I'm underneath it, the overnight. Does it go higher? Sure. But I have to cover my bases saying I'm long mid-range. Let me get out at the top. Now this one looks like it definitely is over 1R. But the whole conversation of risk reward as well is my stop loss is down here. What if someone bought it on its way up with a tight stop there? Where they should be getting out, regardless of risk reward, this VWAP, or maybe you could even say that level, that might be someone's 2R, 4R, 1R, half an R. Everyone's just going to be different because it depends on your stop loss placement. Even going back to this one, how I got a winner out of it. What if someone bought it a little bit better than me, same stop loss? That is probably technically their 1R. So they have to be hoping that fortunately they went exactly 1R and they got out of the trade. No, if I can make some money to the next VWAP, I'll do so. And then you'll get plenty of trades where they do go 1R, right? I want you guys to not think it matters, but some of them do go 1R. Okay, great. That'll be a full-size winner off of the full risk that I put on. We still do want them, but I'm definitely willing to take trades that don't meet that, right? I'd rather make 0.8R than 0R, right? So in this case as well, the quicker it moves and more run directional like this, I would have gotten what? 0 if I move my stop loss to break even. Or yes, maybe it's still up there and you can make the next push down. But this one happens to be 1R. But even if it was 1.6R, 0.8R, when it moves that quickly, I need to be doing something when it's breaking for a new low of day. Same thing on this one. I got a great bounce price off this New York VWAP. 3 candles flush to the low. It's 1.2R. Wow, good for me. I made a little bit more than 1R. I'm not even focused on that. I'm getting out at the next level, in this case, low of day. So sometimes, let's say for this example, if I were to short it here and I want to get out at the low of day, that risk reward doesn't make any sense, right? So I'm not going to put my stop loss up there at 100 points and go scalp it for 10. There is a line where that's just not worth it. But if I could risk 118 points here in NQ and go grab, let's just say 110, yeah, that's close enough. We will take that, right? So there's some trades that aren't worth it. This trade goes exactly 1R, but it's just really looking at the strong bounce for a new high of day, trading back to somewhere we've already been, right? So same thing back here. If I were to long it there, knowing I probably need to get some profits off at that high, my stop loss is probably down here, right? This entry stop loss is way bigger than this take profit. Yeah, probably not worth it. So that's why I'm not going to take it. Now, 1R doesn't exactly matter, but there does need to be some sort of level of that's worth the risk to find out if I can go get around 1R, right? I don't want to sway anyone. I'm trying to get as close to what I've risked as possible. Who wouldn't want that? Because then that next loss comes in, it's going to be full size. But I think the main lesson is this example would be perfect. I made 0.8R. I'll be way better off bagging a bunch of 0.8Rs than always looking for 1.5R, but many times getting 0, right? I'll take the smaller win, just getting out where it's telling me to, right? Same idea back here. Stop losses, not for my plan, are discretionary for a lot of people, right? So if I'm trading back to this high, again, what if someone got a little bit better of a price than me, put their stop loss at these bodies, then this move up here and this stop loss is probably over 1R. So yeah, they got out for over 1R, but mine is exactly 1R. But either way, we have to get out of this trade at the high. There's no other way to put it, because what if I'm having a wide stop down here and this is 1R? Doesn't go up there. But you're telling me you're not going to make money in that move because it has to go exactly 1R, or otherwise you just don't want money? No, it comes right back down. It's like, oh man, didn't go 1R. What a shame. Doesn't need to go 1R. You're in profit. Scalp your money back to the high of day. Get out of the market and look to do it again, right? There's plenty of examples of this. 0.9R. I'm long on the break above New York VWAP. That one's very close to 1R, right? It's worth it. But yeah, that's pretty much a win. Let's take it. But I'm long mid-range out at this top of range. Why? Because on the left side here, it's also that overnight VWAP. I need to get out there. We might retest and bounce off it, which we did if I could pull up the other mark above it. That same thing. If this was only 0.7R, am I just going to do nothing up here and say, I know there's a VWAP in the way, but I'm hoping we break through it because my 1R is up here? What? The market does not care where your risk reward is. It cares where the lines and the prices and the levels are. That's what we need to be reacting off of, not our made up risk reward that we put in, right? Because like I said, someone buys it here with a stop loss there, they should get out at the top of range regardless. For that trade, if you draw it out, probably like 2R. So how did someone make 2R and I only made 1R up to this VWAP? Well, because our stop losses were different. Our prices were different. I don't know. It doesn't matter. We have to get out at this same level regardless of where we got in. So that's the thing I'm trying to hone into, you guys, right? Another 0.8R winner. What a shame. If I could stack those up, end the day green more times than not with some small base hits, right? Those 0.8Rs, 0.7Rs. I don't even mark them up like that. Just speaking it out here. 0.7R, 0.8R. Then those 1Rs will be there, right? I'm not like never getting it, but I'm not focused on it that I need to get it every single trade, because that way I'm still able to make money in these small moves. And then when it moves super strong, I'll also make money in those, rather than just making money in the strong ones. So if you take anything from it, you want to be making money in all kinds of moves, not just the strongest ones when it goes a theoretical 8R and everyone makes money. No, even if this was the low of the day, right, and it comes back up, I don't care. I'm able to make money in that move because I'm not greedy. I'm not tied to a certain risk reward. I'm just looking to put money in my pocket, stack wins, however small some of them may be, and keep on showing up the next day without taking big red days. Another thing that's going to hold you back if you're following this risk reward thing, right? No outsized red days, because that's going to really hurt you, right? If you're always bagging $200, but then that loss comes and it's $800, well, then that's a problem, right? But if I can keep my losses and wins around the same size, and I can just win more times than not, we're golden. Every now and then I'll hit a home run. Every now and then I'll take a small bunt, right? Those 0.7R wins. But still, majority of the time, my trades, as you'll see on stream, do go around 1R. But I'm just not focused on it. Just happens to move that far, right? So I appreciate you guys tuning in. Make sure you hit the subscribe button, leave a like, leave a comment of what you guys want to see next for this 25 days of trading series. But like I said, hopefully you'll tune into stream. The first month is free. If you go to AceFX TV, the link is down below. First month free. You can watch us trade when we're getting in, when we're getting out, why we're getting out, because you'll see 0.8R. Why are they getting out here? Well, there's a view up in the way. We all need to get out. No matter how much money we're up, we got to get out. All right, so I appreciate you guys. I'll see you guys on stream tomorrow morning.